If you've recently Googled, what is a good mortgage rate right now? Fixed or variable, which is better? How much mortgage can I actually afford? You're not alone. Searches for help with mortgage just hit their highest levels since the last housing crisis. Rates are higher than what people got used to, and a lot of folks feel completely stuck. I'm Fedah, and I'm going to slow everything down and answer those questions right now. Before we dive in, I'm here to help you understand how mortgages work, but I'm not your lender or financial advisor. Always talk to a licensed professional before making big decisions. Think of this as your crash course, not your final answer. What I can do, give you a clear mental model so you actually understand what's going on. The big questions everyone's asking. When you look at what people are searching, it falls into 5 buckets. Is this a good rate? Fixed or variable? Which is better? How much down payment do I actually need? How much can I borrow and should I borrow? I'm already struggling. What help exists? We're covering all of it in 3 pillars. Pillar 1. What's a good rate in a high-rate world? Pillar 2. Fixed versus variable, without trying to predict the future. Pillar 3. What you can safely afford, not just what the bank approves. Then a quick section if you're already in a mortgage and feeling trapped. No panic, just clarity. Pillar 1. Is this a good mortgage rate? Here's the truth. A good rate is relative. It depends on general rates in your country right now, your credit profile, the mortgage type and term, your overall financial picture. Here's how to think about it. 1. Compare your offer to the average, not your friend's story. Every major market tracks average rates. US, 30-year and 15-year averages. UK and Canada, typical fixed and variable ranges. If your offer is way higher than average for your situation, shop around more. Studies show just getting multiple quotes can save you serious money because lenders price differently. 2. Don't just ask, good rate. Ask, good rate for this term. A slightly lower rate over a much longer term can still cost you more overall. The real question is, for this term and rate, does the total cost make sense for me? Use calculators that show total interest over the loan's life. Let the math help you. 3. A good rate you can't sleep with is not a good rate. If your payment leaves you with zero margin, makes you anxious about any surprise, depends on everything going perfectly, then it's good on paper, but bad for your life. We want affordable and sustainable, not just technically approved. Pillar 2. Fixed versus variable. Quick definitions. Fixed rate, interest stays the same. Payment is predictable. You're buying stability. Variable, or ARM, rate moves with the market, payments can change. You're trading stability for potential savings and risk. Instead of guessing where rates will go, even experts get this wrong. Ask yourself these 3 questions. Question A. How much surprise can my budget handle? If a higher payment would break you, then fixed makes sense. You're buying peace of mind. If your income is flexible and you have strong savings, then variable might work, but only if you can handle increases emotionally and financially. Question B. How long am I keeping this mortgage? Ask yourself, am I staying in this home for the full term? Or moving or refinancing in a few years? If you expect to change things soon, the initial rate might matter more than the 30-year story. Question C. Which risk do I want to live with? Every choice is a trade-off. Fixed, your risk is rates fall and you're locked in higher. Variable, your risk is rates rise and squeeze your budget. There's no perfect answer. Choose the risk that fits your personality, income, and plans. Pillar 3. How much can I afford? Lenders look at income, debts, credit, and property value to decide what they'll approve. But there's a gap between maximum approval and what's comfortable and safe for your life. Here's how to think about real affordability. 1. Start from your life, not the lender's maximum. Before the bank tells you a number, ask, can I still save for emergencies, cover basic living comfortably, have room for joy, kids, travel, hobbies? If the answer is only if nothing goes wrong, the number's too high, even if approved. 2. Assume things will change, because they will. People face job changes, health surprises, family responsibilities, rate changes. Affordability isn't, can I squeeze this in? Affordability is, can I carry this through normal life ups and downs? Give yourself margin. Future you will thank you. 3. Don't forget the non-mortgage costs. First-time buyers often forget property taxes, insurance, repairs and maintenance, HOA fees or service charges. These can turn a fine mortgage payment into something suffocating. When asking how much can I afford, look at the full monthly cost, not just the mortgage line. If you're already struggling, this part's for anyone searching help with mortgage. Everyone's situation is different, but here are common moves people explore with professionals. Talk to your lender early. Many have hardship options or temporary arrangements. The earlier you speak up, the more options you have. Check if refinancing makes sense. Sometimes a different term or product helps. Sometimes fees make it not worth it. Local advisors matter here. Review your budget honestly. Sometimes it's not just the mortgage, it's everything around it. Seeing what can be trimmed buys breathing room. Get free, nonprofit advice. Many regions have free housing or debt services that guide you without selling you products. None of this is about shame. The last few years have been rough financially for a lot of people. The goal isn't perfection, the goal is stability and dignity. Quick recap. A good rate is reasonable for the market, your profile, and your term, not a magic number. Fixed versus variable is about choosing the risk and stability that fit your life, not predicting rates. Affordability isn't what the bank approves, it's what you can carry without losing sleep or flexibility. If this gave you even one clearer way to think about your mortgage, hit like so YouTube shows this to more people in the same boat. Subscribe to Fedah Signals. Here we take big economic forces and translate them into calm, practical choices you can apply one decision at a time. See you in the next video.